Okay, I show that we are at 12 o'clock, so we will go ahead and get started. Those of you that are joining us today, thank you so much for taking time to be with us. I know that it's Veterans Day and a holiday, so a lot of you might be joining us from home, and that's great. We're glad that we can offer this and that we are in a time that this is conducive for. So today our speaker that's with us, many of you probably know. He's a good friend of mine, and I have enjoyed working with Frank for many years now. So Frank Crawford, he is the president of Crawford and Associates, which is an accounting firm located here in Oklahoma City. The firm specializes in providing auditing, counseling, and accounting consulting and accounting services solely to government entities. So you've probably worked with him in your city or have heard of him, at least seen him. I know he's a speaker nationally, especially here in Oklahoma. So you've definitely seen him. But over the last 35 years, Crawford and Associates has provided a variety of audit and accounting services to all sizes of government, including many types of financial statement audits and attestation services, fraud investigations, internal control analysis, accounting policy and procedure development, outsourced internal auditing and internal monitoring, developing management anti-fraud programs and controls, and quality assurance reviews, training, and expert witness services. I know that Frank has also been a huge asset during this year for the CARES Act funding and working with cities to make sure that they're getting the funding that they have available. So if you have questions about that, I know that Frank would be happy to assist you with questions about that. He's been a huge asset for all of us. So Frank is currently working with many of the U.S. states and territories, Commonwealth, and freely associated compact governments on audit, finding, resolution, and financial analysis projects, and also serves as a technical consultant and advisor to a number of federal government agencies. He is commonly known as Frankie to many clients, friends, and family, but he also has the good fortune of being married to Cindy Crawford, not the supermodel, but better. Together, they have 2 children, Madison and Blake, and 2 grandchildren, Brody and Brinley. And we're happy that you were with us today, Frank. So I'll turn it over to you and have at it. Thank you, Frank.
Thank you, Lacey, and thanks everybody for joining. I'm glad to actually join in. I was, if you haven't heard, I've been kind of in limbo for the last couple of months. My wife had contracted COVID in a very bad way and spent 43 days in the hospital, including 33 days in the ICU and 17 days on a ventilator. So it was kind of touch and go for a while, but luckily, I am happy to say she is home now. She's been home for 3 weeks, and if you didn't know, outside of about a 38-pound weight loss, you wouldn't notice anything had even happened to her. That's how well she's doing and how well she has recovered. So I know COVID is a very serious topic, and the way we had to go about coping with it was very odd, in that we were not allowed to communicate with one another for the first 30 days of while she was in the hospital. No visitors, no nothing. And so that was kind of driving us a little bit both crazy, and in reality was driving her much more crazy than it was me. She was suffering from a condition known as Icu Delirium, where you literally make up things in your mind and believe them to be real. And so on about the 30th day, when they finally got her out of the COVID ICU and into the regular ICU, I got to go visit her. And one of the first things that she told me was that I needed to get her out of there because a man with a boat had came into the room the night before and had took her out of the bed and put her in the boat, and then sailed her down the hospital hallway to the end of the hall, where the guy then did her hair for her. And I said, well, that's interesting, a boat, huh? And she said, yes, and I'm going to tell you, it happened. I know you don't believe me. She was pointing her finger at me. And so evidently this was one of 3 or 4 stories that have some relevance of truth to them when you're in the ICU for a long period of time. You kind of weave in little bits of truth into other stuff that's not true, and it all becomes one big story. So we've actually had a lot of fun kind of recanting and going through some of the stories. But we are very glad she's home, and thank you for those of you that knew and had reached out to us. I appreciate everybody, and I appreciate your thoughts and prayers through this process. But we are almost back to normal, and we are very excited that she is home, and especially me. So with that, that kind of explains why you haven't heard or seen, or I haven't been really available for the last few months. This has been really a taxing time, but we're kind of back to normal. And so what I thought we would do today for the very short hour that we've got is talk a little bit about the importance of internal control and its link to prevent fraud, because what we're seeing now, and a lot of this is COVID driven, is there's a lot of new risks that are popping up in the governments because of the reactions of the government to the COVID environment. I mean, if you kind of think about how things worked pre-COVID, everybody was there at City Hall, everybody's doing certain different activities and certain things. People are coming in, we're interacting with the public, we have controls and policies and procedures that we follow, and certain people do certain things. And then all of a sudden, we don't have that anymore, and we're not letting people in, and we're not actually coming into the office, or some people come into the office and some people don't come into the office. And so the entire environment has kind of flipped on us, in that what was working pre-COVID as far as helping us prevent fraud and embezzlement or bad things happening, a lot of that has been tossed out the window, and we're kind of having to think on our feet while we're either being virtual or in a virtual environment, or we're not having city or town halls open, and things of that nature. And so control is obviously a very big deal, and we're going to talk about that from the fraud element also. As Lacey mentioned, a lot of the governments and many of you that are watching have been awarded some CARES money via the state. That money carries some risk with it also. In other words, when the state put that money out and allowed us to request reimbursements for certain types of public safety and public health expenses, there are risks to that money. Obviously, that's cash that's coming right back to you, just like any other cash. Once it gets in your pot or in your coffers, it's going to be subject to risks, just like all other cash. So we're going to kind of talk a little bit about that, talk a little bit about what's going on, talk about the importance of internal control, and kind of relate it to a little bit of fraud. And then if we have some time, I'll tell you some of the funnier fraud stories that I've been involved with, if you haven't heard some of them already. So we'll talk a little bit about what internal controls are. And I know that that's a buzzword that a lot of people, kind of just glosses over and have that glassy look in your eyes. It isn't the most exciting topic, but from a standpoint of protection and protecting the public's interest and preventing our assets from being misused or abused or subject to theft, they're very, very important. And so we're going to talk about what they are. We're going to talk about why they're important. And then we're going to talk a little bit about, like what I said, the fraud alerts that are kind of going on right now from a perspective of the local government area, and what we need to be doing about them. So how can we specifically react to some of these risks that are present? Because that's kind of what internal controls are designed to do, is take the current environment and the current situation and try to put some either preventive or detective measures in place. Preventive meaning that we're trying to stop something bad from happening, or detective type controls where we put them in place not to prevent something, but to easily see something isn't right, so that we can then jump in and fix it before it becomes a very big problem. So we typically split a lot of our controls between what we would call preventive controls and detective controls. So a lot of the stuff you might think, well, gosh, I'm doing this, and somebody else reviews it. Well, why are we doing that? Well, probably because one or both are either preventive or detective in internal control, and we have to have usually more than one person involved in a process or a policy or a procedure in order to ensure that those type of controls are doing their job and preventing or detecting those significant types of bad things from occurring. So that's kind of what we're going to talk a little bit about today. And again, I could probably talk all day about this, although you wouldn't want me to talk all day about this, because literally about halfway through, you'd stab yourself in the thigh with like an ice pick or something just to get the blood flowing again. So not the most exciting topic, but a very, very important topic. So who is it that sets this kind of stuff? I mean, it's not really me or Crawford and Associates or any other CPA firm that's out there just making stuff up. When we tell you, hey, you ought to have somebody else reconcile cash or somebody else collecting the money, there's a lot of this stuff that's actually spelled out in what we call internal control standards. And there's typically two sets of standards that local governments follow. You follow one or the other, or kind of a combination of both. One is called COSO, or the Committee of Sponsoring Organizations of the Treadway Commission. It's called the COSO Internal Control Framework. That one is probably the oldest one and is probably the more typical one that most governments follow. However, the federal government has their own standards of internal control. And since the federal government likes to call their guides by colors of a book, the yellow book is one, the red book is one, the orange book is one. Of course, they have the green book, which is the federal government standards for internal control that federal government agencies like HUD and Housing and Human Services, they all have to follow. And it's also what the GAO and the Comptroller General of the United States follow. So COSO kind of weaved its way down into the local government level, while the Green Book is kind of used at the federal level. They're very, very similar to one another. I'm not going to talk about the differences between the two, but they're all centered around the same concept of what can we do to protect our assets from theft, misuse, and abuse. And so we'll probably talk much more about COSO because that's the more relevant to us at the local government level, and not talk so much about the Green Book. So what are internal controls? Well, here's kind of a broad definition, and this is right out of that COSO framework. It's the entity, and that means you, the city or the town, the entity's process affected by your board or your council or your commission or your trustees. It's affected by management and people and personnel, designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. In other words, what is it that we do and who we hire and how we're governed that can provide the citizenry some reasonable but not absolute assurance that we're going to do the right thing. We're operating correctly, we're reporting our results correctly, and we're complying with the various laws and regulations that we're supposed to be doing. That's really what internal control is. And so it gets split out into certain objectives, which we'll talk about in a little bit, and certain functions as we apply it. And we'll talk about the COSO cube, or you've heard of a Rubik's cube before. There's a COSO cube that kind of looks just like a Rubik's cube that we basically use to apply in the internal control framework. And we'll see it kind of as we go through this here in a little bit. Here are the control concepts. They are geared to the achievement of the objectives. So remember, we had 3 objectives. We're going to operate, and we're going to report, and we're going to comply with all the laws and regs that we need to. So we're trying to achieve those objectives, and that's what these internal control concepts are related to. And then they're made up of a series of processes that consist of ongoing tasks and activities, which are a means to an end, not the end itself. The end itself basically is the operation objective or the reporting objective or the compliance objective. How we get there is a lot of these ongoing tasks and activities that you're probably more familiar with. It's why you reconcile cash on a monthly basis. It's why after you're done reconciling that somebody might review the reconciliation. It's why you have certain people collecting money, certain people different people reconciling the bank statement, maybe a different person posting information into the system. In other words, A segregation of duties process is one of these things. And again, these objectives, the achievement of these objectives and these processes are affected by people. Obviously, you as the employees, the governing body as the overseers, management as management. It isn't just affected by policies and procedures and systems and forms, but about people and the actions that they take at every level of the organization. You could have the greatest policy, the greatest set of procedures, the greatest systems, and the greatest forms. But if you have a couple of dishonest people in the organization, all of that stuff doesn't matter. Coercion between two or more employees can pretty much circumvent just about any kind of form of internal control. And so it isn't just about, well, we have all these policies in place, we have all these procedures. It is about who we're hiring also. And that's one of the things that gets most overlooked in a lot of internal control ideas. Remember, process, achievement objectives affected by people, and we're trying to provide reasonable assurance, but not absolute assurance, because I don't even know of an internal control concept or process where you could obtain absolute assurance. And then even if you could do that, the amount of time and people it would take to provide absolute assurance would not be cost effective to run the government. You can't just simply go hire an unlimited number of people. You can't just go have an unlimited number of policies and procedures, because the government won't be efficient and it won't be effective, and it certainly won't be cost effective. So we live with this concept of reasonable assurance, and I kind of associate it with the weather. If somebody told me that I was reasonably assured that it was going to rain cats and dogs today, I probably would have gotten my umbrella out of the closet and a raincoat before I left for work. That's how high a reasonable level of assurance is. It's not absolute assurance. It's just that, hey, this is you're pretty reasonably assured that this is going to occur. So if you wanted to assign a percentage, and again, this is just my way of looking at it, to me, 80% reasonable assurance of a chance of rain today is going to make me grab my umbrella. 70, 65, kind of debating. I don't know if that's really reasonable assurance, but I think reasonable in this concept is meant to be a high level of assurance. And then lastly, adaptable to the entity structure. Everybody's a little bit different. Some organizations have more employees than others, some have more resources than others, some have different systems. So the control concepts have to be flexible in their application to the entire entity or the entire process, because everybody's entity or everybody's process is going to be a little bit different. All right, so let's talk about those three objectives for a little bit more, and then we'll kind of launch into a couple more things. Remember, operations. That's kind of what we think about as the day-to-day stuff that's going on. We are looking for internal control as an objective in the operational side to help us with the effectiveness and the efficiency of those operations. How can we provide these services to the citizenry at a efficient and effective enough pace that it provides the objective of what we're trying to do? In other words, what are our operational performance goals? What are our financial performance goals? What are we doing to make sure that our monies and our assets are safeguarded from any kind of misuse or abuse? In other words, these need to be effective things and they need to be efficient. If we lose either the effectiveness or the efficiency of our internal controls, then it's going to fail us in the operational perspective. The reporting side, that's another one that you're probably more familiar with, that maybe a role like Crawford and Associates takes or your auditors take at the end of the year. External financial reporting, like your audited sets of financial statements, that's also an objective of internal control. Outsourcing your financial reporting objectives to a CPA firm like ours is an internal control process in and of itself. Internal financial reporting, the monthly reports that you prepare there's a process that you go through in order to get the right data in those internal reports also. And there are some governments that even report on what we call non-financial items, performance measures. How effectively are we managing the street department with their budget as it is? So internal, external, financial, and non-financial reporting is one of the issues or the objectives of internal control, and typically include concepts known as reliability, which means, is this accurate? Is this information accurate? Is it timely? That means, is it relevant? Because you usually need information pretty quickly after a period is over in order to kind of make a decision that relates to that period. Transparency, you've heard that buzzword over the years. Is it open? Can everybody see what's going on? Or are we conducting meetings behind closed doors and making decisions that no one knows the concepts behind? And there may be other terms set forth by regulators or grantors or other recognized standard setters, or even your own policies can kind of be dictated towards the levels of reporting that you're going to do. So typically, you guys are going to see internal reporting on a monthly basis. You're going to see external financial reporting at the end of the year, and then you might see kind of other forms of reporting in between, but it's all related to accuracy, how quick I can get the information, and is it transparent? Because those are the three big concepts. The last objective of internal control is about compliance, which I don't have to tell you that government operates on a lot of red tape with a lot of redundancy. And it was actually designed that way because of the fact that this is public money. And therefore, there are laws and regulations that seem silly to us that we have to apply, but we apply them because it isn't our money, it's their money. And so governments aren't really designed to roll along like a well-oiled machine in many cases. They're designed to clunk along with multiple redundancies to protect the public's interest because it is the public's money. That's why we see so many laws and so many regulations related to government that it just outweighs a lot of the other objectives. That's why compliance is one of the biggest objectives of government as far as internal control is concerned. Whereas internal control of my firm, which is a private corporation, I don't have a lot of compliance outside of the normal rules and regulations. It's very different for a government as it is for the private sector. So there's that COSO cube that I was kind of telling you about that looked a lot like the Rubik's Cube. Basically, the objectives are there at the top, as you can kind of see, cursor hopefully. Operations, reporting, and compliance at the top. Those are our three objectives. And then we have these components of internal control that we use to divvy up what it is we need to do to achieve those objectives. And then how do we organize those things over here on the right? So, for example, if you were to take this slice here called control environment, what a control environment really means is how well is the tone at the top of the organization? In other words, do we have management and governing body members who are serious about transparency and reliability and accuracy? Or do we have management that, if no one's looking, they try to shortcut things and take a different way and maybe even borderline push rules and regulations? Because in one control environment, you're going to have one type of structure, and in another control environment, you'll have a different type. So tone at the top mentality, whether there's a culture of honesty and ethics in the workplace. If you have those things in that control environment, then your operations work better, your reporting works better, and your compliance works better. Whether we're at the entity level, the division level, or department level, or an operating unit like a utility unit, or a functional level like an individual department or a public safety type function. So that's how all this stuff is organized: entity, division, unit, and function. And then anything from tone at the top mentality to where do we think our risks are. For example, in most cities and towns, your risks are from a monetary standpoint in utilities and court, because there's a lot of cash coming in. And when cash comes in a lot of frequent, smaller amounts, that carries a risk. And so those are where you see a lot of controls designed because of that risk. And you see a lot of the control activities and multiple reconciliations occurring at that level also. The fourth slice here is called information and communication, which simply means, is our process transparent? Is the information that we generate accurate and reliable and transparent? And how do we get that information out to everywhere? So all of the controls that we're talking about are striving to do these three objectives within these 5 slices. And there's actually 17 individual principles or concepts related to COSO that work into these objectives and those 5 elements. The last one being monitoring activities, which means that we from time to time go back and look and say, has anything changed in how we do internal controls over the last year? And if I were to go in today and say, hey, describe to me what you're doing on processing transactions now in utilities and court, you might describe to me today a process that's entirely different than the process that occurred a year ago, pre-COVID and post-COVID. So the fact that we have to keep our eye on whether systems or circumstances or the environment changes means that we have controls in place to monitor these kind of things. There's those updated 17 principles kind of based on their 5 slices that we talked about over there. And again, I'm not going to spend a whole lot of time on this, but I just wanted to make sure you knew the concept of the COSO internal control framework. Remember that first slice that I told you, which was control environment. Remember how I said that's kind of a tone at the top mentality? In other words, does the government demonstrate commitment to integrity and ethical values? Do we exercise responsible oversight? Do we establish structure and authority and responsibility? Do we demonstrate a commitment to competence whereby letting you attend training such as these? And then do we enforce accountability? And all of that is talking about that control environment. The risk assessment is what I mentioned a minute ago about identifying where our risks are, and so that we can then design some control activities in the blue that will help me achieve or help me look at those risks and figure out where my targets are. In other words, think of risk assessment as a game of ready, aim, fire. I'm going to understand my entity and my environment. I'm going to aim at the areas where I think my risks are the biggest, and then I'm going to fire away with a form of internal controls to help me achieve those objectives and minimize those risks. And so that's where we develop control activities, cash reconciliation, different people collecting money versus different people reconciling the bank statements, and things of that nature. And then again, information, communication, and monitoring. We talked a little bit about how do we get that information out and how do we watch this over a period of time. That's the concept of internal control. And again, you may have internal control in your government that doesn't use any of these words on the screen, but that doesn't mean that you don't, in substance, have elements of the COSO cube in your framework, because just about everybody does. So we've talked a little bit about why internal controls are necessary, and we talked a little bit about that reasonable assurance issue of achieving those objectives. If we literally had no internal control, there's literally no way that the entity could be achieving any of its objective. You could have no assurance from an internal perspective of whether or not you're achieving any objectives. One of the things that internal controls also lead to is that when you put financial statements together, that you have some confidence that they are fairly presented. Now, internally, that means you're making sure all your deposits got into revenue and all your checks that you've written got into expense, and the payables and everything that's factored in. From an external standpoint, it's why you hire people like us or other consultants or auditors to help you with those financial statements. We're trying to make sure that anything that comes out in the form of a financial statement has relevance and reliability. It's accurate and it's timely and it's it's going to provide assurance to everyone. That's what internal control helps with. We talked about compliance with laws and regs and knowing that we've got so many different ones that we have to worry about. We've talked about safeguarding of assets. This is maybe why you have limited access to a vault, or maybe why you have cameras on a vault, or why you have different cash boxes when different registers are used or receipts are used. In other words, we're developing these things for a reason. Even though it might seem kind of redundant to you, there's a reason for it. And then, of course, the fraud deterrent. That's the big one. That's the one I've highlighted today, and the one we're kind of talking a little bit more about as we go on. We have got to stop fraud either before it happens or be able to detect it fast enough that we can stop somebody or somebodies from embezzling or taking money from us in a large amount that will be difficult for us to recover. Lastly, a greater ability to identify, analyze, and respond to those risks and the changes related to those. So that's why. Now, what are some of the limitations of internal controls? Well, this is something that we all practice. It's called faulty judgment. Sometimes an internal control might be related to the judgment of an individual, and a judgment might say, well, in my judgment, I think we won't do this because I think it's redundant and we don't need it. Well, there may be something on down the line that makes much more sense as to why we're doing it, and that person may not be privy to it. So sometimes just looking at something, and you may come to a judgment and say, well, that looks right on its face, but if you dig into it a little further, you might find that it isn't really right. A bank rec on the back of a bank statement may look like it's working, but unless you add it together and foot it and subtract out the outstanding checks and make sure that those checks are real, you may not be reviewing that reconciliation in an appropriate way. It may make a faulty call on a judgment call that this reconciliation is done appropriately when in reality it isn't. Another limitation related to internal control is we all make mistakes and we make errors. And some internal controls are designed to catch those things, and then sometimes they slip through the cracks. The third one is the one where I don't really like it, and that's where we call it's an override of the control system, where typically you see management do a lot of this, where they'll come in and they say, I know that this is our normal policy related to the approval of invoices and how we pay them, but I want you to bring me, the manager, any invoices from ABC company, and I'll do the approving. Well, that doesn't make any sense. Why should ABC company's invoices go to somebody different than all the other invoices of the government? That doesn't make any sense. That's called an override of the control system. And when those overrides occur, that's kind of a red flag. And we need to stop and think about what's going on here. And so again, anytime the control system is overridden by management or anyone else, somebody needs to stop and say, wait a second, what are we doing this for? And then lastly, circumvision by collusion. Remember how I said most of our internal controls are designed to prevent one person from doing something, but if you could get a couple people or even more than a couple people involved, then you can pretty much circumvent almost any internal control. So that's why internal controls have these limitations to them and are not the be all end all, is because it doesn't take but just a couple of people to kind of circumvent them working together. But again, that takes more cooperation, more collusion, and ultimately, ends up being exposed regardless. So you can circumvent internal controls by collusion quite often. All right, so moving on, let's talk about fraud a little bit. Here's the fraud triangle. I don't know if you've seen this or have heard about it before, but typically somebody wrote a book about 60 years ago and said, in every fraud, there's 3 points, like a triangle, that occur. There's usually a pressure or a motivation to commit the fraud. And a lot of people will basically say, well, look, I could never be motivated to commit a fraud. And the general rule of thumb is, if you think that you could never commit a fraud, you've just not had the right pressure yet. If somebody were to come to you and say, I want you to commit a fraud against your employer or your loved one will be killed, who's going to sit there and say, oh, well, shoot, I guess that's a pretty good pressure or a motivation to commit fraud. Now, I guess some of you might say, well, which loved one? I'm kidding, just teasing. But that's typically a pressure, a motivation or an incentive to commit a fraud. Now, those are usually accompanied by what's called an opportunity. In other words, an ability for somebody to carry out some kind of misappropriation of cash or some other organizational asset. So I'm motivated to commit a fraud for whatever reason. I've noticed that there's an opportunity for me to commit the fraud and nobody's going to notice it. And so all I need now is a rationalization, a justifying of how I can live with my dishonest actions. Believe me, I have seen a number of rationalizations that people use because I've seen a number of these frauds occur over the last 35 years. And it's you really can't do anything about the rationalization because people will come up with their own reason. But the only thing that the government can do is we can't do a whole lot to minimize the pressure other than just not put them under so much pressure that there's a motivation. But the only thing we really control is the opportunity. In other words, if I'm motivated to commit a fraud and I can live with myself, if I don't ever have a chance to do it because everybody's watching or there's too much oversight or I can't get away with it, then I don't have an opportunity. And so the 3 points of the fraud triangle can't connect. And so you get to control the opportunity at the government by using these internal controls to help prevent this in the first place. There's nothing you can do about rationalization and not much, if anything, you can do about pressure. But opportunity, the lack of access to cash, the inability of somebody to reconcile something without somebody noticing it doesn't reconcile. That's why a lot of those internal controls are there, minimizing or eliminating that opportunity for somebody to commit. All right, so let's move off the fraud triangle and we'll talk a little bit more about motivations and pressures. Why do people commit frauds? Again, there's all kinds of motives and pressures out there. Unmanageable personal obligations, addictive vices. The one I've seen mostly that's happened around here is gambling. Ever since the advent of tribal gaming, where it made the opportunity for us to basically gamble and game so easy, a lot of the frauds have been perpetrated because of gambling, which is not good. Adverse employment relationships. Sometimes I'm motivated to commit a fraud against my employer because I don't like my employer. Sometimes I steal from my own petty cash fund because it's my petty cash fund, so it's not really stealing, I guess. But again, that's a joke. Adverse employment relationships will cause people to not feel so bad about committing a fraud and have a motive or pressure. I just don't like that person, so I'm going to teach them a lesson. Another one, living beyond one means. Again, people get into financial difficulties, whether it's gambling, whether it's health related, whether it's we've lost our job because of COVID, or we've had reduced hours because of COVID, but we don't have reduced expenses. There's all kinds of motives or pressures out there now, along with the new one that's related to the COVID pressures that are there. The opportunity, which I talked about, what's there that makes it easy for somebody to steal or to take money. Here's just a couple that I see all the time. Unrestricted access to cash or other assets. We allow everybody to go into the vault. There's cash sitting there uncounted or counted, unbundled, sometimes in a shoebox. We've got unfettered access to materials and supplies. People can fill up their cars at the city's fuel facility because no one's keeping track of the fuel. They can fill up their personal cars there. Basically, unrestricted access is a big deal. So there's an opportunity. Inadequate segregation of duties. You got the same person collecting money at the window who posts that payment to the customer's account, who then actually fills out the deposit slip. And oh, by the way, they also reconcile cash. If that person's doing all four of those things, there's probably all kinds of stuff going on without adequate oversight of that position. That's why in certain governments where we don't have the ability to segregate a lot of those things, we have someone else doing a observation or a oversight type control over some of the duties that those people or that person does. Inadequate monitoring or oversight is another opportunity. I don't know how many times I've seen somebody basically steal because they knew they could get away with it because no one was watching what they did. It sounds goofy, but that occurs. So I don't have anybody watching me. I'm in charge of all this and I've got complete access to it. Oh, and no one's ever going to be able to figure this out because the records are a mess. Messy records in and of themselves usually are a red flag to auditors or people like me, where it says, hey, this isn't that difficult to keep track of. People owe us money, they come in and pay, and then therefore they owe us nothing or they owe us the unpaid balance. We ought to be able to track all that stuff. When you're having trouble tracking it, that usually is not a good thing. So if you're not reconciling cash, but once a year instead of once a month, that's usually a bad thing. If your general ledgers and your trial balances don't balance, it is called a trial balance. It's not called a trial imbalance or a trial out of balance. Those things are supposed to reconcile. They're supposed to balance. So anytime that records are a mess, that's a big opportunity. Lastly, we talked about that third point, rationalization, which is the one thing you can't do anything about from a control perspective. This is basically how somebody gets away with living with this. I'm unhappy with my job. I don't like my supervisor. I'm being treated unfairly. I'm due this money. They didn't give me a raise last year. I'm only borrowing. So I plan to put the money back. I've seen other people do this, so it must not be a big deal. Who's getting harmed by this? It's not, the government's money. It's not their money. It's the citizens' money, and the citizens, once they pay it in, they don't know anything about it. So again, all kinds of different rationalization of how they can justify it. And again, not a whole lot you can do about this other than to try to keep a happy and workplace environment that's happy and content. But other than that, there's not a whole lot because, again, the right pressure or the right motivation will basically trigger some kind of rationalization in and of itself. So here's fraud red flags. And again, if you've got a lot of these, I hope I'm not pointing anything out to you, but I just want to make sure that if you've ever seen any of these things, that you kind of recognize them as that this isn't the way it's supposed to work. One that we see all the time is that employees are scared of supervisors. If a supervisor tells an employee to do something, they will do it, even if they internally feel that's improper or illegal or wrong. But because if they don't do what their supervisor tells them, then they'll be disciplined or fired or even worse. And so if you get into an environment where no one wants to talk to you because they're scared of their supervisors, or no one wants to show you anything or tell you anything because they're scared of their supervisors, that's a fraud red flag. And the minute that comes to our attention, auditors like me and others like me start asking more questions and dig things in. So if we get the impression that people are running scared from a particular individual or a group of individuals, you might as well just tell us right away, because that's a red flag to us that we're going to pick up on as we ask more and more questions. We talked about management's override of the controls. Again, when things are supposed to be done a certain way, but yet a vendor, an employee, a customer is treated differently than everybody else. That doesn't make any sense. So if you ever have a situation where a utility customer, a vendor, or an employee is treated differently than everybody else as far as payroll, utilities, or compensation or anything, or vendor payments, that's a red flag that needs to be brought to somebody's attention. Not taking time off is another big deal. I know that sounds crazy, but if somebody has perpetrated a scheme where they're able to take money from the government, they don't want to not be there so that somebody else might do their job and find it out. In fact, when you look at the data about frauds and internal control, you'll find that most of the time, like 70% of all the frauds that get reported were discovered by another employee who had to do the job function while somebody was off or while someone wasn't there. So if you have somebody who never seems to take a vacation and they've been there 35 years, where on one side it looks like you ought to give that employee a medal, that's usually a red flag for us as auditors that somebody's not wanting to take time off because they don't want anybody seeing what's going on in their area. It would also be true of not training employees under you and only showing them bits and pieces of a puzzle, but not the big picture. That's almost like not taking time off, not showing somebody what you do as a job so that they can't replicate what you do. Employees with opportunities that exhibit evidence of a motive or pressure. Somebody's got a grudge, somebody's showing a motive, somebody's got a pressure, somebody's got a gambling addiction. If you know about that stuff, then if there's an opportunity for that person to take, they probably will. So any employees with opportunities that also have evidence of a motive or a pressure, remember, a motive or pressure, an opportunity, and a rationalization are the only three things you need. And the rationalization thing is easy. Cash drawers being out of balance on a daily basis. I get it that we make mistakes on a daily basis, and sometimes we might be a little long and sometimes we might be a little short, but we can't be hundreds of dollars long every day or hundreds of dollars short every day. That makes no sense either. And so if we're having trouble balancing within a reasonable netting of longs and shorts over a period of time, that's not good either. Bank deposits not being made timely. You know, I love to see bank deposits made daily, but I do understand that there are some situations where we just can't get bank deposits to the bank on the same day. But I'm talking about bank deposits where we receipted something in August and it didn't get deposited until January. That's crazy. There's no explanation for that whatsoever in any rational, normal environment. So if you have evidence of that and that's occurring, that's a problem. And then bank statements that have difficulty in reconciling or that we don't reconcile consistently, and they have differences, like after we list all the outstanding checks and the outstanding deposits and we come up with a number, and then we try to match that number with what's in the general ledger and it's different, or what's in the trial balance, it's different. And so we go and we add a plug number on the reconciliation. Difference, plug, suspense. I've seen all kinds of different names. Don't call it suspense, because that usually is a trigger to be that, hey, something's suspenseful about that money. But don't use the word plug either, because that's usually a red flag. But you're kind of stuck because you don't know what to call it. It's just a difference. And so if you have differences that you can't figure out and they're big and they happen all the time, something's not right. Some more red flags. If I see, or if we see a bunch of IRS notices for untimely tax deposits, or the fact that you're getting notices that you failed to make a deposit, that's a big red flag. Budget differences that you can't explain. Here's what the budget said we were going to do, and here's what we actually did, and man, that's way different. Well, why? I don't know. Well, that's weird. You should be able to explain it. We've talked about the special handling of certain transactions. Remember, all the transactions of a payable accounts payable ought to be treated the same. All transactions in payroll ought to be treated the same. All transactions within utilities ought to be treated the same. Court, the same. So special handling of certain transactions is a bad red flag. Purchasing or payment documentation is lacking or doesn't exist. If you pay for something, but there's no invoice that shows that what it was for, or there's no any kind of purchasing or payment documentation doesn't exist for something, that's an unsupported expenditure. Not only is a red flag, it's probably illegal also, or an improper payment. Invoices that there never appears to be an original, or they appear to be altered via a fax or a photocopy. You know, I understand in today's electronic environment that sometimes invoices are only in images form, but there ought to be an original somewhere. And typically, even if it's an electronic, there's an original electronic image. But be leery of any types of invoices where the street that they have an office on is not there, or it's only a PO box, or you're having to mail a payment to South Dakota to pay a local vendor, or there's no telephone number, or there's a misspelled word on the invoices. Those are just weird things. So again, all kinds of red flags. Contracts or invoices in amounts that are just under the dollar threshold that would have required bidding. So if you require council approval for anything $5,000 or over, and all of a sudden on the claims list, you see a whole bunch of $4,999 invoices, that kind of should trigger, wait a second, what are we doing here? What are we splitting purchases, splitting stuff so it doesn't have to go to council approval or it doesn't have to be competitively bid. So anything just under the threshold or within, dollars of the threshold that would require an extra step is usually a red flag. Sole purchases, sole source purchases, where we excessively buy something from the same vendor all the time, even though there's evidence that other vendors provide it. Or certain vendors that seem to obtain all or an extraordinary share of the business when there are multiple people proposing or bidding. That's usually a red flag too. And then, of course, lastly, payments are made to unfamiliar employees or terminated employees. If for most of our governments, every employee. If all of a sudden a name shows up and you don't know who that person is, you've never seen them, that makes a little weird transaction that you should be saying something about. And then, of course, you don't pay people who no longer have a job there. Some family relationships exist within the same entity. And again, in small towns, this is really hard to avoid. But we want to try to make sure that if there is family relationships that exist within the same entity or the same department, to make sure that there's not any unusual or questionable spending that's occurring in those divisions. I've had a lot of people related in the court process and the police process where husband and wife, maybe one works in court, one works in as a policeman. Then you just have to make sure that stuff's being looked at and there isn't any unusual transactions or questionable spending occurred along those lines. And then lastly, if the government is receiving tips and complaints regarding misappropriation, you should be following up on them. Now, if you open up a hotline or a fraud tip box, you're going to get flooded with stuff. And usually about 1 out of 10 of those things usually has some relevance, but that's probably a great process. But if you have those tips or complaints filed and no one does anything about them, that's usually a red flag as auditors. Okay, a couple of statistics just to kind of point out from a kind of a relatively older report, but still holding true today. Most common schemes typically are the forgery or the unauthorized use of government or company checks, followed by the theft of cash receipts and unauthorized electronic transfers. So those are the top 3 or 4 schemes that we're seeing right now. Not so much in the government world where they can't get a hold of government check stock, but the theft of cash and unauthorized electronic transfers are happening all the time. Governments are the second highest industry with greatest losses from embezzlement of all industries across the board, with the average loss in a major case being over $1 million. Most of the perpetrators usually begin embezzling when they're in their early 40s. I don't know why that's the statistical anomaly, but it's typically early 40s. I think maybe when they're young, they're too scared. When they're old, they're too close to retirement. And so it kind of happens right in the middle of that process. Typical schemes, major schemes, will happen for an average of 5 years. That's a really long time. And most embezzlers are likely in some kind of financial position where they have access to claims or money or processes that they can gain an advantage from. And we mentioned gambling being a very clear motivating factor, as well as a desire to kind of live outside their lifestyle or their budget. So what can we do for detection and deterrence? Strong internal control environment. Trust is not an internal control function. We trust her or we trust him because they've been here 35 years is not an internal control. In fact, it's the opposite. So trust is not one. We need to avoid any lazy or lackadaisical atmospheres. We want to make sure that everybody knows that when they're at work, they are to be working, because lazy environments will usually spawn lazy results. We want to segregate sensitive duties, like I mentioned earlier about collection and bank reconciliation and depositing, if we can. We want to have robust oversight of personnel by management and we want management to be overseen by an active governing body. And again, implement a system of interlocking business control oversight tools like audits, investigations, hotline reporting, tip box, and then anytime that there is a irregularity or a suspicion that's brought to your attention, you want a strong response regardless of who it comes from. So what specifically can we do right now? Work on your segregation of duties, kind of think through what people could do if they have more than one duty assigned to them and try to segregate what you can. Rotate responsibilities for accounting people where everybody is trained at everybody else's position for some level of time. We should make people take time off away from their duties, and if they refuse to take time off, we should assign them to do something else while someone else does their primary job. Multiple signatures are very helpful unless all of the multiple signatures are on one stamp and somebody's got control of it. It doesn't do any good to have 3 signatures on every check if all 3 of them are on one stamp and somebody can do that. So we want to have eyes looking. It's not the signatures, it's the eyes. Keep unused check stock and cash locked away so that we don't allow access to that kind of stuff. And then, of course, we want to have the best IT services, the best personnel, and we want to have the best type of security system-wise that we can provide. Random audits. Look at petty cash regularly, balance cash drawers regularly. If you've got government issued credit cards, make sure you pay attention to those charges regularly, and that means monthly. Expense reports, if you got people traveling a lot, look at that stuff regularly. Make sure each payment's got support and appropriate documentation, and make sure that your backup policies are working for your financial records on a daily basis. I don't know how many times I've seen people get locked out of their systems by ransomware or other type of ITs, and they say, oh, well, no, we're not going to pay any kind of ransomware because we've got a backup, and then they go find that the backup is backup and that it's old data. So daily deposits, bank recs on a timely basis, reconciling utilities and court receivables on a monthly basis, know the vendors and make sure they're real, examine payroll records for any kind of anomalies, and investigate customer complaints thoroughly. Background checks for all employees. That's how we keep that control environment set. Current employees on a periodic basis, just to make sure circumstances haven't changed. Listen to what's going on in the grapevine. Employee break room, gossip among employees. Don't let something that's being issued around in a rumor just go, because in a lot of cases, those rumors have some relevance to them. And then at the end of the day, we need to make sure there's some discipline for the perpetrators, because if they don't think they're going to get disciplined, even if they're caught, then they'll continue doing it. So again, I'm up with my time, or close to my time. It looks like I've got a minute or two for any possible questions that anybody may have, but if not, we'll call this a day. But again, let me leave you with the idea that anybody can commit fraud. You just have to be on the look for it constantly. And trust is not an option. Trust is not an internal control. And so my general tagline has always been that the typical fraud perpetrator is either male or female, young or old, religious or not religious, and of any color. It doesn't really matter. It's basically anybody who's under those the right pressures, the right motivations, and the opportunity presents itself. Just about anybody can rationalize away. All right, Lacey, any questions from anyone before we sign off?
I don't show that we have any.
Okay.
But that was great information. I always love hearing your fraud presentation and fraud stories, just because it's so interesting, the audacity that some people have. So
I've been shocked, but to the point where it no longer shocks me.
I can understand that. Well, thank you everybody for being with us today, and we look forward to seeing you next week. Same time, same place. Thanks, Frank.
Thanks. See you guys later.
Bye-bye.